Hi, to introduce myself, I'm Sarah Hughes, VAT Manager here at PKF Cooper Parry. I work in all things VAT, terribly exciting I know, but I also get involved in other taxes such as customs duty, environmental taxes and even sugar tax. HMRC want to be the most digitally advanced tax administrator in the world, a big ask I know. HMRC believe that with these changes it will get businesses to get their taxes right, reducing the tax gap. It will also encourage businesses to stay on top of record keeping. So what are the steps currently being taken by HMRC? Since those three words, making tax digital, were first mentioned by HMRC, both the deadline for income tax and corporation tax has been pushed back, but the deadline for VAT in April 2019 remains. HMRC have confirmed until the system is working well for VAT, they won't introduce into other taxes, and certainly not before April 2020. HMRC are currently approaching businesses to ask them to take part in their pilot scheme before it goes live next year. They're starting with simpler businesses and then working towards more complex. If you are selected, it isn't mandatory, but HMRC have assured businesses that they won't be under any extra scrutiny should they decide to do it. So who's affected by this? Any business that's registered for VAT and has its taxable turnover above the VAT threshold will be affected by the changes. HMRC have said that voluntary registered businesses can still file under Making Tax Digital, but you'll have to specifically apply for the exemption. By 2020, all VAT registered entities will fall within the regime, irrespective of size. Businesses who fall within the regime will be required to file VAT returns using VAT compliance software from the quarter starting on or after the 1st of April 2019. So what do we mean by VAT compliance software? Sadly, it won't be as simple as filling out a spreadsheet anymore. HMRC are accepting spreadsheets, but they need to be API enabled, whatever that means. The portal as we know it, where we fill in the 9 boxes, will be removed, and instead you'll register for a new digital account with HMRC, where you'll upload the information that way. Your software must be able to talk digitally to HMRC and send transactional information across to them. For companies with bespoke systems, the onus will be on you as the taxpayer to ensure that your system is compatible and that HMRC recognise this system. HMRC will need to work with each software provider, including bespoke system providers, prior to April 19, and it is therefore important to speak with your provider before this deadline so they can set up dialogue with HMRC. For those not on a system, we would recommend talking to us about implementation. HMRC have confirmed they will not be providing software. And then there's the businesses that have more than one system. For example, you may have a sales system that records all of the sales made, and then this feeds into your accounting system. These two systems need to be able to talk to each other to ensure all the relevant information is uploaded to HMRC and that you remain compliant. Similarly, for VAT groups, where you have different members of the VAT group on different accounting systems, these accounting systems need to be able to talk to each other as part of the consolidation into your group VAT return, and again to make sure you remain compliant. So what exactly is it that you need to submit to HMRC? You must record the date the supply took place, the value of supply and the rate that you've charged. You'll also need to have a record of the output VAT split between taxable, standard rated, zero rated, reduced rate, exempt and outside the scope. For input tax, you must electronically have a record of the input tax to support your claim. It doesn't, however, mean that you need to hold invoices electronically. Finally, for adjustments, HMRC have accepted that they will accept these as a single line transaction within your accounting package. If you're a partially exempt business, you will only need to post a single line for irrecoverable VAT. So what will HMRC do with this data? HMRC will use the data to find potential errors and anomalies by running checks on the data. This brings good news and bad news. The good news, less inspections. HMRC have already started to reduce the number of local offices, and therefore less inspectors mean less inspections. It does, however, mean that HMRC can now manipulate the data remotely, looking for unusual transactions that maybe don't record VAT or are posted to an unusual VAT code, and so this is therefore likely to throw out further compliance checks. It's therefore more important as to how data is now recorded in your system. So what happens if you don't comply? Between April 19 and April 20, this is a soft landing period, and so any penalties are expected to be a little lower, but post April 20, penalty regimes are expected to be quite severe. So what do you do with all of the information that you've just absorbed? HMRC are still providing updates on this, and it's definitely still a work in progress from their end. The pilot scheme is expected to run until the end of June, and then possibly final guidance issued in July and August. In the short term, it may be worth waiting until the final guidance is issued, so you get a full understanding of what the exact criteria will be when submitting information to HMRC. It is something, however, that should be in the back of your mind that from April 19 you need to be compliant under the Making Tax Digital regime for VAT. Therefore, recommend get in touch as soon as possible with us and your software providers to ensure that the system you're working on will be compliant with the new regime. Also, it's important to consider the information that's been input into the system and whether any changes need to be made from a data input point of view.